Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 288 on September the 15th, 2023. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on AdvisorShares, Trust, Pure U.S. Cannabis ETF, American Airlines, and Intel Corporation. And we discuss three new trades on Aurora Cannabis, Palantir Technologies, and Cameco Corporation. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit the website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. And for anyone that wants to learn how to trade options, I teach students how to trade options, not just study theory, with the combination of videos and live coaching calls, and soon to be live daily chat. If you're ready to take your trading to the next level, send me an email to schedule a phone call. Now, the U.S. equity markets finished the week relatively unchanged relative to last week. The Dow Jones Industrial Average gained 41 points, closing at 34,618 points. The S&P 500 index lost 7 points, ending the week at 4,450 points. And now it's time for the topic of the week. The topic of the week is getting past starting. I know a few people who always seem to be starting. They are starting a new diet or starting a new hobby. Maybe they're starting a new book or even sometimes starting a new business. They love to start. Starting is always fun because the bar is so low. There are no expectations. Everything is new and exciting. The problem with starting over and over and over again is that you never give yourself a chance to achieve mastery or even just being good at something. If you want to be good at anything, whether it's professionally or even a hobby, you have to get past starting. For any of you who have been listening to this podcast for a while, the key to getting past starting to trade options is simply placing some trades. And the beauty of options is that you can control your risk. So when you're starting, keep your risk small, regardless of how big your account is. I know a guy who has millions of dollars and is afraid of trading options. When he started to trade options, he put a huge position on. He quickly lost way more money than he wanted to lose, and then walked away saying that options were evil. Having a large trading account will not guarantee that your trades will be profitable. Understanding options risk will help you limit losses and get beyond starting so that you can start driving and counting profits on a daily basis. That's the goal, right? Starting is great, but it's time for some of you to get past starting. And that's it for the topic of the week. I've just started to share the September surprise video via email, the video I mentioned last week. Several of you have already requested it. If you have not received it yet, I will send it to you in the next couple days. Building a community of traders always seems to help everyone involved. My job is to make sure that the tide is rising, and I have a few tricks up my sleeve to help with it. Many of you have tied your ship to mine for years via this podcast. Now it's time to join me in the group and take on some bigger waves. This is where the journey really gets fun, and it's not too late to request the video, so just shoot me an email. All right, let's get into the trade review for the trades last week. We're going to start off with the covered call on the AdvisorShares Trust Pure U.S. Cannabis ETF, symbol M as in Mike, S as in Sierra, O as in Oscar, S as in Sierra. At the time, the stock was trading for $8.22 per share. I looked at buying stock and selling the October 9 call at $1.05, hoping for a return of 22.26% in 6 weeks. Shares of the Pure Cannabis ETF gained 84 cents, closing at $9.06 per share this week. The call option we sold gained 51 cents, leaving us with a net gain of 33 cents if we were to close the trade out immediately. Now, we have two solid reasons not to close this trade yet. Number one, we are $1.89 above the break-even price. That means we are inherently making money on this trade. And reason number two, if we hold this trade to expiration and the stock remains above $9 per share, we stand to gain $1.83 of profit on this trade. So leaving for roughly 1/6 of the profit would be tragic. This trade is working out, so keep an eye on the stock in the coming weeks. We, of course, still have 5 weeks before expiration, and be prepared to play defense if needed. Next up, we have the credit spread on American Airlines, symbol A as in Alpha, A as in Alpha, L as in Lima. At the time, the stock was trading for $13.98 per share. I looked at selling the October 14-15 call spread at 38 cents, which could give us a maximum possible loss of 62 cents. Well, shares of American Airlines fell 67 cents, ending the week at $13.31 per share. The out-of-the-money call spread that we sold is even more out of the money. That means we made money on this trade, which is great. You could buy the spread back for a profit of 17 cents, roughly 44% of the maximum profit for the trade. You could justify exiting this trade early if you don't want to wear the risk for another 5 weeks, or if you think the airline will turn bullish in the coming weeks. Still, there's no need to make any adjustments at this point. This trade is working out too. And our final trade from last week was a debit spread on Intel Corporation, symbol I as in India, N as in November, T as in Tango, C as in Charlie. At the time, the stock was trading for $38.01 per share, and I looked at buying the October 37-38 call spread for 64 cents, which could give us a maximum gain of 36 cents, or that would be a 56.25% return in 6 weeks. Well, Intel shares fell 13 cents, ending the week at $37.88 per share. The in-the-money call spread that we bought is somewhat at the money now. The spread lost 13 cents on this 13-cent stock decline. Still, the stock is trading above the break-even point, and there's 88 cents of intrinsic value in the spread right now. Given that we only paid 64 cents for the spread, that means the spread has 24 cents of intrinsic value to us personally, or that would be profit if it was to expire right now. There really isn't a need for any adjustments at this point. Keep an eye on the stock, just as I said in the others, just in case it turns bearish in the coming weeks. For now, let's see what the coming weeks hold for the share price. All right, that's it for the trading review from last week's trades. Today was expiration day for all September monthly options. All new trades on today's show will use the October 20th expiration for monthly options. Finding good trades after expiration can be a struggle. It definitely was today. So the pricing for many of these trades will likely improve on Monday, so keep that in mind. We're going to start off with the covered call on Aurora Cannabis, Inc., symbol A as in Alpha, C as in Charlie, B as in Bravo. The stock ended the week at 98 cents per share. You heard that right, 98 cents per share. And I'm looking at buying stock and selling the October 1 call at 23 cents, which could give us a return of 25.51% in 5 weeks. Now you enter this trade by buying stock for 98 cents and selling the October 1 call at 23 cents. This trade makes the most money if stock prices finish above $1 per share. The break-even price on this trade is 75 cents. And in real terms, the stock purchase will require $98 and you'll collect $23 for selling the option. This trade alone is proof that you can start making trades and learning about options even with a small account. Next up, we have a credit spread looking at Palantir Technologies, Inc., symbol P as in Papa, L as in Lima, T as in Tango, R as in Romeo. The stock ended the week at $15.30 per share. I looked at selling the October 15-14 put spread at 34 cents, which could give us a maximum possible loss of 66 cents per spread. Now you enter this trade by selling the October 15 put at 74 cents and concurrently buying the October 14 put for 40 cents. This is a credit spread because we're selling the spread, and this trade makes the most money if stock prices expire above $15 per share. The break-even price on this trade is $14.66 per share, and in real terms, you'll collect $34 per spread that you sell and have $66 at risk. And our final trade for the show is going to be a debit spread on Cameco Corporation, symbol C as in Charlie, C as in Charlie, J as in Juliet. The stock ended the week at $40.30 per share. I'm looking at buying the October 39.40 call spread for 63 cents, which could give us a maximum gain of 37 cents, or that's a 58.73% return in 5 weeks. You enter this trade by buying the October 39 call for $2.61 and concurrently selling the October 40 call at $1.98. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $40 per share. The break-even price on this trade is $39.63, and in real terms, you'll pay $63 to enter the spread, and your maximum gain is $37 per spread. Now, I typically wouldn't use this stock so soon for the show because we made a trade in it 4 weeks ago with the same company, but this was one of the best trades that were fit for the show this time, so I decided to reuse it sooner in case you guys are wondering. So that's it for today's show. Thank you guys so much for all the emails I've gotten and for reaching out. Definitely, if you're looking to be part of the start of this trading community, the membership group, where we're going to be supporting each other and you'll get all sorts of access. I'll tell you more about it in the video. Send me an email. I'll shoot you the video, the link for the video. It's going to be super simple, very clear to understand. I'd love to have you on board. So shoot me an email at eric@theweeklyoption.com. Otherwise, have a wonderful weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.